Good morning, everyone. Well, after yesterday's little bit of a wacky kind of a day where stocks were giving it up, some of the leaders were giving it up. Here we are with the NASDAQ futures and the NASDAQ 100 ready to make new all-time highs. So whether I called it Mr. Schizophrenic, yesterday I used the word squirrely. How some stocks sold off that had been so strong out of nowhere, when it was this QCOM news, which that is continuing to go higher this morning. And surprisingly, Apple is up a bit, but, lawsuit over. I guess that's good for everybody, except for the lawyers, which no one's going to shed a tear for them. And so here the markets are pushing up to the all-time highs right here after the miracle, what I would call a miracle advance after a sell off like that. And then just, it was just normal. It wasn't. And then right back up with one red week, the whole way up, right up into the new all-time high. So it's a new world in the markets. Things change, and that's what makes markets difficult, but we always learn from them. And this market will go down in my personal history book as to what seems to be impossible is possible. Not that it always repeats itself in the same way, but there are many patterns that are repetitive. And what I do is kind of search for the common denominator between different markets and patterns there. Patterns like this that occur. So, whether it's just the Trump thing, drain the swamp, China, this, that, all of the, even things that were coming up, global warming, thank you, George, and so on, Hollywood ready to burn down the White House, who knows what. AOC, it's amazing times, honestly. And Maxine Waters head of the banking system, and no one's concerned, right? But here we are knocking on the door of all-time highs. We are market participants, and our job is to follow what is. We try to rationalize what is, and sometimes it works against us. That doesn't mean we shouldn't try and find that, as I said, common denominators between patterns or intermarket analysis and internals and so on and so forth to help guide us. But there are times where markets kind of just are confusing. So, what we've been doing lately, especially, is just kind of do it on a certain level, not ignoring the markets, but, looking at what stocks are in favor and just going with them. And that's been working out. But it's certainly a situation that isn't comfortable, because historically we know that things are going to change at some point. This isn't going to go on forever, and corrections do happen. And, the money that you make during times like this can evaporate pretty quickly if you don't have a plan in place on how to manage. So, I'm just looking at this LRCX that we had an open play. This was typical of yesterday, and it doesn't look like such a big deal. This one wasn't, but you've got a topping tail where it just looks so great. It was up here and it looked like it was going to attack 200, and it couldn't. The Intuit trade, which, looked fantastic, popping up like that, and then just coming all the way back in. Intel that sold off at the end of the day. I guess on that news, it's just tanking here. It doesn't look like so bad on the hourly chart, but the 5-minute chart was just dropping. You see the bar here, and now it's, on its way up towards $60. So pretty erratic kind of price behavior. Another thing I say is it is what it is. And so we'll just trade it accordingly. So where are the markets at right now? Well, spiders, they're working their way up to that all-time high there at 293.94. Within striking distance, they're 291.17. And so as they get up there, we'll see if buyers want to keep pushing it to get through there. And I think they probably do, right? What's the sense in having a new high party without the S&P joining? So the Qs are there, right? 287.72. Well, not quite, but I mean, well, yes, they are 287.72, 287.53. So new all-time highs, right? So party hats all over the place, maybe heading up toward 190. We shall see. Not that far away. Line in the sand always begins with the prior day's low, and then we go to a swing low. And while that doesn't really defined as a pivot, and I'm just eyeballing that, it doesn't have three higher lows, but nonetheless, it's a significant line because it did dip down, and there's this consolidation here. So if prices were to drop below here, you've got unfilled gaps down below, and there's a swing there. So just be aware of these reference points, especially as an intraday trader. As prices come down to them, we see if they bounce. We monitor the NYSE tick for selling pressure. And on the way up here, it'll be a good idea to have an alert. If you don't use the NYSE tick, set an alert up there at plus 1,000, because maybe this thing starts. And, with this gap up here today, it may just tag plus 1,000 right at the open. Then one of the ways you could use that is see if the markets pull back and see how much the ticks pull back from there. So another way of monitoring relative strength and weakness, meaning is say the markets pull back and the ticks just stay up at say plus 500, 600 or so. It would show that, buyers just aren't running for the hills. Well, yeah, Tony, we'll wait. We'll see what the reaction is to this resistance. But, the way it went up, I see two things. One seems to think it's going to happen, I just be like, wow, really a wow. It's a wow already that it came back from this V bottom, but a measured move, meaning here's a strong move up, here's the red bar, and to a measured move, meaning this move equal the distance of this one. So projecting that upward could put it, I suppose, up at 200 or so, just kind of eyeballing it. But, you can just look at the numbers here and just project and see where that sets it up. So we'll see where that goes. But a lot of times these type of trends, they do exceed. And then after they do that, that's when the momentum stalls. So we'll just see how the reaction is there. Russell, as you know, has been lagging. It's up here at the top of its range. Many times it does what we call bringing up the rear, playing catch up. So this may be the market to be in if the markets are going to continue to move higher. Nothing to suggest they're not yet, but looking for the Russell to play catch up with the rest while maybe money comes out of the stronger ones. And that happens through markets. It happens through sectors as market rotates from what's already had big moves into things that have not participated as much, looking for them to play catch up. So keep an eye on that. 30-year futures, sure. We always take a look. We look at the Dow first, which is it's got a little ways to go to get up there. Just 2,700, big whole number there. It's consolidating 1, 2, 3 continuation on the weekly, and so far, it's early in the day. Yesterday, we had that selling, but it wasn't able to push deeply into the wide range bar. So still bullish price action while testing that prior topping tail. And we'll see if we can take out yesterday's high today or yesterday's low. Right now, it's just an inside day. Bonds, they didn't hold. Right. So yesterday, I think even the day before that, pre-market, I spoke about this lower high, lower low type of pattern that often sets up the reversal because of the weekly time frame being in an uptrend. So the weekly had this bottom action here and the move up, and this consolidation, and then it broke out. So while it hasn't totally negated the possibility of a turn here, the depth of retracement is getting a little bit too far from the norm. This is, maybe right on the line here. That minor support is where the turn would happen. And it tried to. There was the first attempt, and then it made the lower high and the lower low. So it really, needs to get turned around. We don't want to see it coming all the way back here. But if it does, you can be sure. If it comes here, down here, history, price patterns being what they are, buyers are going to step up here, but it makes it very uncertain. So when I see a pattern like this and say, okay, the weekly is still in an uptrend, the depth of retracement is a little deep, but it hasn't totally blown this out of the water. The pattern to look for at that time is when it tests this is the W bottom pattern, because that repairs the damage and the uncertainty of the depth of this retracement. So again, coming down here, this is where there's going to be demand. There's going to be buyers. We wait to see the reaction. It has its reaction. But then because of this uncertainty, this bearishness of this, the depth of this moving down, you want to see buyers step up. And when I look at price patterns, and the way I like to explain them is these are the actions of what other institutions are doing. Banks, we're talking about bonds here, banks, hedge funds, traders, whatever it is. This creates uncertainty. Everyone thought that looks at the chart, buy the pullback. It failed. Come down to minor support. They step up. It fails. So now that shakes the confidence of no matter who it is, right? Whatever your information is that said buy, it's not working. So that uncertainty being created, which it does, how do we fix that? Well, it comes down here and it tests it, and then a shallow retracement, and it's typically shallow because of the bearishness of this move. And then when it retests it, there's a new reference point that was created by new buyers. And so maybe you get a topping tail or whatever the pattern may be. And this corrective action, accumulation over time, which gets away from this, is a much better setup to buy than this, because this isn't climactic. I'm getting a little more advanced here than maybe I should, especially for the YouTube. I don't know. We don't never know who's there. But anyway, funny, if you get a climactic pattern and you play that, that's one kind of setup. It's probably likely to bounce. When it churns down, when you get a lower high, lower low, the W bottom is a better setup. And eventually, as you learn all this and comes together, it really is common sense. Okay, let's continue. Hope you found that helpful. And gold. Nope. Sitting on the edge. You can see the edge pretty clearly here on the 60. And, the weekly lower high, lower low here. It could get turned around. It's just not happening here. It's not happening, and it's down on some support. So if you're interested in gold, just sit on the sidelines for now and see who wants to step up here and can accumulate in this area and maybe, again, get away from this decline, which, you see the way it dropped and kind of dropped here. And this looks like a little mini version of that. Not exactly the same, but kind of a mini version of that. And buyers stepped up in this area. So it's kind of like their last chance, I think. This was the high probability buy because it was already broken out and it just got started here. And now it's rolled over, so that was the first drop. So that they bought that, and now kind of like it couldn't get too far. So for me, it's like, just wait and see what it can do. Maybe it's a good short, if it starts to break here, you'll see. Oil, still the bull market, and coming up into some resistance here. And it's what I would call a little bit of a, just overlapping bars, opens and closes here. It's not a significant resistance area. As you can see, looking at the daily chart, it's just this little consolidation here. So that's a concept from the MTS class is that, why focus on those overlapping opens and closes? Because it's going to be a little cluster on a smaller time frame where it's stalled. Is this all that significant relative to this bull advance that's been going on here? I would say no, but that doesn't mean ignore it. So now as it's going up there, you just go into, our trend following mode. If it can take out this high, your major support becomes there, and you just keep following bar by bar as to what's going on. Energy, we had a good day, different sectors. The XLE just doesn't look like the best one. XOP looks better. XES, bigger, wider bar, and OIH. These ETFs look like they can play some catch up since oil has been doing well. So that's something to consider. And what else? Let's take a look at the VIX. Where the hell is the VIX these days? Right. The 10 area is a pretty long-term reference point, but it's still churning down there. So, we always look for a combination of reasons why a market might top out, market internals, maybe relative weakness. Does VIX have contango? I don't know, Dan. That's your word. I know you're a very active dancer, so that contango is something you've really been able to master. You can explain that to them.
Definitely.
I got two left feet when it comes to contango. With that being said, I'll hand it over to you. It's 9:22.
Yeah, so we have long positions in all three of those oil ETFs, and XOP actually looks like an ad over yesterday's high. That's right, Gustavo. You know what, Greg? Gustavo just got back from Buenos Aires. I sure hope he brought us back some Argentinian rum.
That's cool.
Yeah, we'll talk about VIX later. Don't have time now. But the quick answer is VIX does not, because it's not a tradable instrument. But these ETFs do have contango, so that's why these are nasty downtrends that will never recover. That's why we play the whack-a-mole game, short every bounce. And remember, there were people buying volatility right here, other services, and I'm like, good luck with that. Let's look at the gappers first. All of our opens are fine. So I want to concentrate on new trades first. Intel, that's the one, we stopped out of the back 2/3, but we still closed out our call spread at a profit. Netflix, I did a little chart lesson and sent it out to our subscribers. Just since last week's MT Live was trading on news. So this is a perfect example of how we love trading earnings. The volatility is going to remain high for a couple hours. So it had a bullish, and I was reading in the journal today, it said their earnings were horrible. They lowered forecasts. They have fewer customers. And so I look at the stock and it's up. So that's bullish. It kind of needs to hold right here pre-market, this 50% level. But our strategy will be to sell a put spread that expires tomorrow. PayPal got downgraded, nothing to do. USB earnings slopping around, no pattern yet. Pepsi, remember, I was going to give this as a long Monday until I saw that it had earnings. Now it's up 125.25. Wow. That's impressive. That's not a clean uptrend, but it's definitely an uptrend. And now it's gapping to all-time highs. That is amazing. I always look at their brethren. So let's see what Coke is doing. 40. So this one might be a better trade. This kind of almost trader or Alex kind of looks like that Hewlett Packard in terms of breaking out of a base with a price void. Yeah, let's keep an eye on old Coke. Morgan Stanley earnings, 48 bucks. Weekly, monthly look higher, but let's get a better entry on the daily. KSU, 121. That's a big gap. It looks like the all-time highs. Let's watch that on a pullback. ABT is garbage, looks lower. I'm not sure if that's in that XHE. We shorted this in our ETF trader. Breakdown daily, weekly, sell setup on the monthly, and that's what the ETF trader is. We position trade, so we're looking for longer time frames, and we'll be talking about that today in MT Live. Of what, depending on your time frame, what charts are your tools? Yum 102. That's the all-time highs. I don't know if that was earnings or if that, yeah, I think it was earnings. Negating this red bar, bullish weekly, monthly, that looks higher. UAL 8780, so it's gapping up here, which is a bullish gap from this multi-week consolidation. But the target's not real big is the problem. CSX, 79 bucks, another gap breakout. Looks like the all-time highs. TMOS, straight up. This was in the journal about their merger now being in question the way it's presently drafted. Netflix, we looked at. IBM had earnings or lack thereof. The journal said, I think it was the third straight quarter of declines, and it's tanking here in the last 20 minutes or so. 138, that's a nasty gap. You know, our gap trading, step one, just mark it off on the chart. Look at that, that's a whole month of trading gone. This thing, it looks lower. If this were to open without this red bar, so just ignore this bar, and it's a bearish consolidation pre-market like this, then that would have been a short under a 5-minute low. But now, that's, you know, you're chasing a little bit. But let's put him in here anyway. Holy, 21 bucks, way up here, but that's a mess. Qualcomm, that was the news yesterday that we were saying that was a power move. Now see how the chart has to naturally expand with price bars, and that causes all this data to get squished, and that just it just shows the power of that move even more. Nothing to do with it though. 80. That's, you know, maybe I would rather. There's no way I'd be buying this thing, but a gapping up here, $9 after yesterday's run. Let's keep an eye on that. I haven't done what's on my other charts. Let's keep an eye on that to short it as a day trade. JMIA gapping up 48 bucks. Wow, this would be this is a beautiful gap and crap candidate. I don't know the rules on shorting IPOs anymore. I don't know if you can short this right away. But that, I would have that on my short watch list. This was the beautiful gap yesterday. Alex found, nice job. And that's an end of day base. So the traders are saying, I'm not giving up my merchandise. Yeah, Gustavo, I actually looked at that this morning. I saw it up a little bit. but it's right in this resistance, but it's a watch. Yes. We have a little retest here on the weekly. So maybe 30-minute high. But I saw it too. If it didn't have all these football players to the left, then it would be a definite, it'd be a 5-minute higher. Lift, we need a W bottom, and then we're going to be all over this. All right, I'm